Hi, welcome to Financial Fridays. Today, for understanding financial statements, under part 2, we are going to focus on balance sheet. The fundamental equation of accounts is assets is equal to liabilities plus equity. If your assets are not equal to your liabilities plus equities, you have made a mistake in your calculation. You have had an incorrect recording. Let's talk about assets. Assets are basically anything and everything that your business owns. At the beginning of the assets, we have what we call the current assets. Current assets refer to anything that is cash equivalent or can be very quickly turned into cash. So think of cash, money in the bank, inventory as your current assets. Even money that is owed from customers, which is supposed to come in pretty soon, would be tagged under accounts receivables, which is a part of the current assets. Thereafter, you have what we call the fixed assets. Fixed assets are those items that cannot be converted to cash very quickly. Think of items of value, such as patents, land, property, even machinery. Your current assets plus your fixed assets is going to give you your total assets. On the other side of the balance sheet, you have first the liabilities. Even with liabilities, you have what we call current liabilities. These are the liabilities that are due in the near future. Think of salaries and commissions payable, bills that are due to your vendors. This is accounts payable. Any short-term loans, bills payable, salaries payable, these are such items that you would classify under current liabilities. Thereafter, you have what we call long-term liabilities. These are items such as long-term loans that you don't owe back in the short run. The sum of current liabilities and long-term liabilities gives you the total liabilities. When you deduct the total assets from the total liabilities, it gives you the net worth of your business. This is equity. Usually, in the equity section, what you will have is firstly any paid up capital that you have invested to launch the business, any reserves that you have been holding into the business, and any retained profits less dividends that you have withdrawn from the business. This is total equity. So remember, total assets is equal to liabilities plus equity, which means your net worth is equal to total assets minus total liabilities.